This is the second session of the e-seminar series of the School of Business, University of Cape Coast. And today we are looking at another interesting area that has featured predominantly in the COVID-19 conversation. We are looking at the coronavirus pandemic, tax reliefs, and financial reporting implications. And we know that a number of participants have joined us. This afternoon's conversation, the table is quite full. In the course of our discussion this afternoon, you'll be hearing about a number of interventions that government has made responding to COVID-19. And to begin on that note, in the wake of the COVID-19, government has made a number of responses. And in responding to the effect of the coronavirus pandemic on the front of businesses and some public sector workers, the government of Ghana rolled out certain support measures to taxpayers to cushion them against the effect of a COVID-19 pandemic. This afternoon's conversation is just to help us understand, what has gone on so far and what we are to expect as a country.
It has been successful. We have a lot of people participating live, both on Zoom and our Facebook channel. Thereafter, we have also noticed that many people develop interest in what we did. Just about a week now, we have recorded about 5.2 views of the previous episode. That is an indication of the interest in the area that we are covering. And today we have also seen a number of people participated both on our Facebook and Zoom, while some people also ask questions directly through their participation on the Zoom platform. So that is the interest we are getting. We also realized that some students were part of the participant and they asked questions relating to their program. Indeed, we believe that we are actually contributing to the discussion surrounding COVID-19. We do know that it is not only a health issue, it's also an issue that translates into financial reporting and business in general. So that is what we have observed. We chose this topic because we have decided that our discussion relating to the COVID-19 should actually focus on the main areas of our various departments. We have 5 academic departments, that is accounting, finance, management, human resource management. We have marketing and supply chain management. These are the departments that we have, and we also have a center of entrepreneurship and small enterprise development. So today's topic actually is a reflection of the focus of our department of accounting. So that is why we chose the topic coronavirus pandemic, tax reliefs, and financial reporting implications. And indeed, during the discussion, we can all attest to the fact that we have tax relief issue in the coronavirus pandemic. We have financial reporting issues in the coronavirus pandemic. And we have auditing related issues within the discussion of coronavirus pandemic. So we believe that we are using the focus of our department to engage the public, to engage our students, to engage our alumni, and to engage the university community and the world in this discussion. The tax reliefs and other reliefs that we have are specific to coronavirus pandemic, and specific timelines have been given. If we take the extension of filing of tax returns, it is specific up to the end of June. So after that, whether coronavirus is still with us or not, I believe that will be the end of that relief. If you take the relief in relation to reduction in interest rate, that has also been given a specific period of about 3 months or so. After that, that is the end of it. We have been told about moratorium on payment of interest on outstanding loans. That is also specific to the coronavirus pandemic and specific to a specific time. Therefore, after that time period, that is the end of that relief. So people would just have to appreciate the fact that it is not going to be with us as part of our usual way of living, that there is an end to it. We have been given some other relief in terms of non-payment of water bill is for 3 months. We have been given relief in terms of reduction in electricity bill. It is not to be with us forever. So that is what I believe the education should be. And the moment we think that it is not going to be with us forever, then we tend to deceive ourselves, and that will misguide our way of living, and then we have ourselves to blame. Yeah, the point is that it depends on the type of audit that you're talking about. If it comes to auditing of your account, you cannot run away. Even if you run away, you will be forced to do so. Because when it comes to tax, the tax person will assess your tax liability based on the account that you provide. So if you are a good business, you need to ensure that you prepare a good account, use the correct professional to prepare the account, and tax authorities will always do their tax audit, except that during this period there is some limitation in terms of the kind of tax audit they do. That's what we were told during the discussion, that most of them are now engaged in desk audit, where they receive documents either through email or whatever means, and they stay in their office to conduct the tax audit and provide the assessment. But even with that, the law provides that after this period, you can then have enough time to go deeper into those entities that you have audited through the desk audit. So there are alternatives to that. So you cannot really run away. And when you run away from tax audit, you are caught. It becomes an offense and a penalty that you are going to pay some administrative costs as applied by the GRA. But I believe the other important thing is not to see tax audit as something that you should run away from. That, as we have been told from the discussion, tax audit actually provide benefit to the taxpayer. There are things that you are doing, you are not doing it in the right manner. There are things that you are capturing in your own account that will actually increase your tax liability. The taxpayer will not come and say, this thing is increasing your tax liability, so I will not talk. They will advise that this thing is not supposed to be included. So it's helping you in terms of tax education. So I don't think that we should encourage people who want to run away from tax audit. I think based on the topic we discussed today, some SMEs may want to hide their activities, especially from tax audit and preparation of good financial statement. But the idea is that if you are able to prepare good financial statement, what you are doing is that you are reducing your tax audit risk. So the moment you prepare your financial statement using the appropriate professional and doing the right thing, and this financial statement is audited by an auditor, you actually increase some confidence in what you are doing. So when the tax authorities come, they are not looking at you with some kind of suspicion, because they know that you have subjected yourself to a good accountant, you have subjected yourself to an auditing firm that have done the right thing, and they are just coming to check whether the appropriate tax are being paid where they are supposed to be paid. That's all. So that is the advice I will give to SMEs. So if they begin to look at these things from this perspective, I believe they will enhance their own record keeping, they will enhance their own preparation of account to a certain standard, and then their activities will be relied upon more. Financing the home, I think some reliefs have been given to people. But as I said, those reliefs are temporal. They are not permanent. They will go away. So you cannot rely on that. This is the time for creativity. This is the time for individuals to be innovative. This is the time for individuals to plan for their finances to reflect the time in which we are. If all of us are able to do that, we will survive the time.
Ideally, we have three types of returns we need to look at. Those that are filed monthly, that is the employee taxes, pay as you earn. We have the value-added tax return, and then we have the withholding tax return. Of the quarterly tax returns, which is what you have to pay every quarter based on your self-assessed figures at the beginning of the year. This would have been impacted by now.
Some companies have started considering virtual annual general meetings in Ghana, including CalBank Limited, which has announced its virtual annual general meeting to take place on 24th June 2020. Deadline for AGMs, either through virtual or traditional approach, should be concluded early. The situation is even more critical, bearing in mind that all members of companies in good standing are clothed with the right to attend annual general meetings and vote. Disclosures of relevant events in financial statement will be critical, but how much disclosures will be enough to foster confidence in financial statement by investors and other interested stakeholders will remain an important stakeholder question. In some countries, including the UK, auditing firms are assessing the appropriateness of taking advantage of government support schemes to avoid reputational risk should they take up government jobs in the future. This is because many auditing firms and professional firms have been hard hit by non-payment of bills by their clients and the difficulty it poses on them in maintaining their staff. That is why today's topic is organized under three solid thematic areas. 1. Tax relief implications. 2. Auditing and auditors' work during the coronavirus pandemic. 3. Financial reporting implications of the coronavirus pandemic. We have carefully chosen the panel to reflect a blend of academic and practice. They are all chartered accountants with some focusing on taxation, law, auditing, and disclosures in financial reports. These academics and professionals have the skills to break down technical issues into simple to consume information.